not seem to be enough pocket pivots, 50, etc., for me to get quickly concentrated. What buy rules were you using? On what? We just, I mean, we don't sit there like we're running, at least I don't sit there and say, oh, I'm up 2%, I'm going to add 2%, up 2%. What I is, if I see a trend developing, I just jump on it, and I go after it full board generally. And I've used the example, somebody's asking a question, you guys get concentrated very quickly, what buy rules are you using? Well, we're definitely not using the low octane buy rules, but the things that, the way I trade at least, and I know Dr. K, when he averages up, he's more aggressive than adding 2%, every 2% up or whatever, however that works. But, I constantly go back to this example, and making big money, at least from my perspective, is not about sitting around with little positions in stocks as they go sideways, waiting around for something to happen. It's waiting for the window to open wide and then jumping on it. And, I'll go back to, I love to use this example. Time travel is difficult here, so bear with me as I go backwards. I love to use this example, on Apple, and you can buy your little positions in here, and you're slowly building your little position here, but I go from here to like all the way into this thing on this day right there, and that's what I'm looking for. I'm not really, stuff is nice, I guess, and maybe it works for some people, but that's how I do it. Now, Dr. K, how do you get quickly invested? What circumstances will cause you to become very rapidly invested, such as we got in late '99?
Okay, well, an example would say be September of 2006. It was the first time since 2003 that I saw so many excellent patterns setting up and issuing pocket pivots. So I found myself in 3 days from the buy signal completely margined out, 200% long the market. And so the process happens very quickly. I just saw so many high-quality names, and I typically would buy, in less certain environments, I might only buy 15% starter position. But in this environment, much more robust, about 25%. Well, first I started 12%, 12.5%, and then I moved it up to 25% because I saw so many new names coming through. So it was the first time I saw a real window open since 2003. And then I continued, with being 200% long, it felt like being in the 90s all over again. And for the next 3 months, the market had a huge, nice rally, and these names carried with it. Some of these names I would sell out the weak ones that, for instance, violated their 10-day and move that money into a new stock that was breaking out or issuing a pocket pivot. So those 3 months were very profitable, where my count went up about 115%. And that was the last time we had a 3-month. The last time we had a 3-month window on the buy side was that period. That was it. We had a 2-month window in 2007. And I'm talking about the general market. Of course, there were some individual names in 2007 that continued to move. I think Baidu was a great one. But in terms of the overall market and being able to play, say, 8 names or more in one's account on full margin, the last long period was 3 months in 2006.
I remember '99 getting very quickly and heavily invested into Oracle. And one of the ways that I caught this last move here is, you see the ants? They're the ants again, telling you you're up out of 12 out of 15 days or better, or 13 out of 15 days or whatever it is, in a row. And what happened is you got the ants here, you pulled back one day, you came out to new highs, I bought. You got the ants, you pulled up for one day, pulled out to new highs, I bought again. Here you got the ants again, and you pulled back. And this actually turned into a little mini ascending base, formed this little cup of handle. And when it started here, I was all over it again going into the last couple of weeks of December. And I remember being, in early December, being up like 300, 250, 300%. And some of the other portfolio managers telling me to take my profits and bag it. Because back then we made 10% of the profits, and that was a lot of money back then. And no, I mean, I could see it was just going to play out, so I just held it right into year end, and actually ended up 520%. So, it just goes to show that just go with the trade, and it'll start to work. Now, right now, in one account I'll be very heavy invested as I'm testing things, but I keep very tight stops. It doesn't mean I'll stay with anything necessarily, but we haven't really had a trending market, so it seems like you get these general burst one way or the other, and you trade them for a few days, and that's basically what you're doing, is swing trading. If we had a much more concerted trend here, we probably get a lot more invested in sit there. So in a good trending market, we get long under the right conditions, and we'll stay on margin overnight. Whereas in this market, I'm very wary of staying on margin overnight or having big positions overnight because of the various gaps either way. So,
Yeah, keep in
um,
mind also when the market's not trending, you're going to have a lot of false starts, and the idea there is to minimize your drawdowns. So you might go, in a situation like this that drags out, you might go 9, 10, 11 months with no profit, where you're up a little bit, down a little bit, and you just keep going back and forth, and it kind of wears you out. It will, I mean, it wears a lot of people out. But the idea really is to have the 30,000-foot view and to know that the market is going to make a move in one direction or another eventually. It doesn't just stay in this trendless pattern forever. At least it never has. So, just keep knowing that there's going to be opportunity down the road.